Hello, everyone, and a warm welcome to our discussion. My name is Hemanshu Jain, and I'm an actuary with Whitepaper Actuaries and Consultants LLP. Today, I would like to begin by expressing my heartfelt gratitude. Our firm, Whitepaper Actuaries and Consultants, have recently completed its first anniversary of incorporation. It's been a meaningful journey for us, filled with lots of learning and growth. I would like to thank you, all our clients and well-wishers who have been part of this journey with us. Your support have meant us a lot. In our previous video, we explored the concept of actuarial gains and losses and how assumptions about the future are used in valuation and what happens when those assumptions are revised. If you haven't seen that yet, I would highly recommend checking it out. We are adding a link to this video in the description below. Today, we are taking a deeper dive into specific but critical part of that topic, that is experience gains and losses. These are hidden stories behind the numbers, the financial impact of real life deviations from what we originally assumed versus what actually happened. So let's unpack this together. Most accounting standards like Ind AS, IFRS, or US GAAP require organizations to recognize gains and losses in their employee benefit valuations. Now, Ind AS and IFRS requires company to segregate these gains and losses into two broad buckets: changes due to assumptions and changes due to experience. But then the reporting often stops there. It doesn't tell us which experience was different from expected and by how much. And in my view, that's a missed opportunity to deeply understand the actual valuation numbers. These these variances are core insights, real actionable insights about how the workforce of the organization is evolving, how assumptions are performing, and whether the two are aligned. They also tell us about unidentified financial risks. Analyzing experience gains and losses in detail can answer tough questions like why did liability increase even though the headcount of the organization remains the same? Or we gave a 10% increment against our 12% assumption. So how much that saved us in the actual valuation? In my view, these are not just accounting queries, but management insights. So let's break this down. So what are experience gains and losses? In every actuarial valuation, we use assumptions about future. For example, future salary growth, future attrition, mortality, and many more. These assumptions are applied at a group level. That is, if they are applied to all the employees of the organization or a group of employees of the organization. So, for example, we may assume that there is a 10% salary increase given to all the employees. But in reality, if we look at each individual employee, then some may have got higher increases compared to others. Or maybe the salaries may not have changed at all. Similarly, we might assume a 15% attrition rate, but that does not mean at the time of valuation we know which employee will leave when. So when we move forward in time, say from March 2024 to March 25, and compare our assumptions to what actually happened, the differences show up as experience gains and losses. Let's consider a specific example. If an employee whom we have assumed only had a 15% chance of leaving the company actually left during the year, then that is a deviation from our assumption and it creates gains and losses depending on how their departure impacts liability. And remember, these deviations happen at employee by employee. So across multiple assumptions all at once. So to quantify this, we as actuary often simulate a scenario where we look at what if the actual is same as what we assumed in last valuation, and then keep on changing each of the actual data trend with the assumption to see what is the impact of each assumption versus the actual. So these differences is our experience gains and losses. Moving forward, how does it help us? It is important to understand that most of these experience gains and losses contribute significantly to the actual valuation. They help us understand and refine assumptions. For example, if we consistently see there are large variances appearing in experience gains and losses because certain assumption is different from the reality, then it is an indicator that maybe either the assumption is not right or there are events which are happening within the fast changing organizations that are not captured with the assumptions. These experience gains and losses also help us improve the accuracy of actual valuations. So experience analysis help uncover any mismatch between scheme provisions and actual practice. For example, if benefits are paid consistently higher than what was provided for in actual valuation, then this sort of deviations can be captured in experience gains and losses. It also helps build stakeholder confidence. When you present detailed, data driven insights to auditors, boards, and investors, it signals control, clarity, and commitment to good governance by the organization. This helps build trust. One of the other factors where it is significantly important to look at is highlighting one time events separately from the regular trend in the data. Restructuring, policy changes, events like significant terminations show up distinctly in experience gains and losses. Understanding their financial impact gives leadership better visibility into what is truly driving the numbers of our actual gains and loss. So simply put, experience gains and losses transform an actual valuation from a compliance exercise into a strategic tool. So let's now look at what are the different types of experience gains and losses. In this slide, we have listed the key drivers for experience gains and losses for a gratuity and a leave scheme and end of service benefits. So one of the key drivers is new joiners. Compared to last valuations, people who join during the current valuation period, they contribute to additional liability, and that results in experience loss. Similarly, people who are leaving the organization, their liability, which was held at the previous valuation period, that gets released, and the company would have paid them some amount. So a comparison of these two gives us the experience gains and loss because of exiting employees. We have discussed that there are salary deviations for between the assumptions applied at a group level versus the individual actual salary increase. So these differences are also captured in the salary deviation gains and losses. Leave balance movement. So for leave schemes, every valuation considers some increase in leave balance, but how actually leave balances have increased at a company level as well as at an employee level, the deviation between the two cause the leave balance experience gains and losses. And then there are other factors like employees who continue to stay with the organization. They are in a way defying the attrition assumption that are taken in the valuation. So these deviations also create experience gains and losses. Each of these drivers contribute in varying proportions. Dissecting them gives a clear picture about an organization's scheme financial numbers. At Whitepaper Actuaries, we strongly believe actual reports should not just be technically correct, but they should also give transparent and insightful view about these numbers, as well as they should be helpful to the management to make important decisions. That's why all our actual reports include a dedicated section on experience gains and losses. We break down each driver, explain their impact, and also add our expert commentary so that the stakeholder don't just see the numbers, but they also understand them. We have heard from our clients and auditors great feedback about this section. We understand it tremendously helped them in understanding and become more confident about the results to be presented internally or if required externally, and can make their decisions much more transparent. To wrap up, experience gains and losses are more than just accounting adjustments. They are a lens into how our assumptions align with reality and a valuable input to improve financial planning, risk oversight, and employee benefit strategy. We hope you find this video helpful. We would love to hear your thoughts or answer any questions that you may have. Feel free to drop us a comment or connect with us through our website or write to us directly at actuaries@whitepaperllp.com. Thank you once again, and we look forward to supporting you in your actual journey. Until next time, take care and stay informed. Thank you.